Hello, welcome to Tory Daily News. My name is Nick, and here's our episode today. China Ministry of Commerce is conducting a one-year sunset review of anti-dumping measures on stainless steel imports from the EU, UK, South Korea, and Indonesia. The review will determine if lifting these measures would lead to continued dumping and harm to China's domestic industry. During the review, existing tariffs will remain in place, such as 43% for the EU and UK, 23.1% for South Korea POSCO, and 20.2% for Indonesian companies. The review concludes by 23rd of July 2025. China Ministry of Commerce announced Monday that it will launch an expert review of anti-dumping measures aimed at stainless steel billet and hot-rolled stainless steel plate and coils imported from the European Union, the United Kingdom, the Republic of Korea, and Indonesia starting from 23rd of July 2024. Starting from July 2024, the anti-dumping measures aim at import of stainless steel billet as well as hot-rolled stainless steel plates and coils originating from Japan will be terminated upon expiration, the statement said. Stainless steel billet and hot-rolled stainless steel plate and coils are widely used in industries such as ships, containers, railways, electric power, petroleum, and petrochemicals. Russia MMK Group reported a 2.6% year-on-year decrease in steel output for the first half of 2024, totaling 6.33 million tons. However, pig iron production rose by 1.7% from the same period a year ago to 5 million tons. Coal concentrate output saw a significant drop by 25.2% to 1.346 million tons during the same period. Sales of MMK Group's metal amounted to 5.78 million tons in the first half, down by 0.8% from last year. In quarter 2 2024, steel output increased by 13.7% quarter-on-quarter to 3.37 million tons, and pig iron production grew by 13.1% to 2.65 million tons. Coal concentrate output declined by 15.6% to 616,000 tons. MMK Group's metal product sales in quarter 2 rose by 11.6% quarter-on-quarter to 3.049 million tons, with premium product sales increasing by 32.8%, making a 45.8% of the sales portfolio. The Indonesian government recent update to the mineral and coal information system now includes nickel and tin, reflecting the critical importance of these minerals to country's economy. Launched on 22nd of July 2024, the system aims to enhance the transparency and efficiency of resource management. The integration of 10 previously separate systems into one centralized platform will facilitate better oversight, regulatory compliance, and prevention of fraud and illegal mining activities. This move is designed to streamline operation for mining companies and provide more accurate data for government and stakeholders. The system will ensure that all transactions activities are monitored in real time, promoting accountability and sustainability in mining sector. Additionally, the updated Simbara will support the government efforts to boost the national revenues from mineral resources, improving economic stability and growth. 3-month coppers on London Metal Exchange eased 0.2% to $9,286 per metric ton by 0950 GMT after hitting $9,233.5, its weakest since April the 8th. Aluminium lost 1% to $2,328 per ton after hitting $2,326, its lowest since March 28, breaking below 200-day moving average of $2,354. Metal markets were looking for signs that Chinese government would take action to address the country's prolonged poverty slump, the biggest driver of industrial metals demand. However, Last week, key political meeting failed to lay out more policies to prop up demand for metals, said ING Commodities analyst Edward Monthly. Without further stimulus measures, there is a little hope for a near-term recovery for the property and construction sector. We expect copper and other industrial metals prices to decline further in the near term to reflect a softer demand outlook in China, Monthly said. China, however, surprised markets by lowering a string of major interest rates on Monday following last week's weaker than expected second quarter economic data. Copper is down 16% since reaching a record high of $11,104.50 on May 20, and this has revived some physical buying in China. The premium to import copper into China rose to $9 a ton on Friday, the highest since April the 15th. According to the report, China Anshan Iron Steel will supply 18-meter long rails to the mine railway under construction in western Algeria. The railway is 575 kilometers long. The first batch of order has signed 7,079 tons. The connected mining area is considered to be one of the largest mining areas in the world, with an estimated iron ore reserve of about 3.5 billion tons. After the completion of this railway, it is expected to increase the iron ore processing capacity to 2 to 3 million tons per year by 2025 and reach the target of 50 million tons per year by 2040. And this is also the end for the news today. Thank you for listening. Goodbye and good night.